It's great to be having this as part of the UNFIF Sustainable Policy Institute. I'm very pleased to introduce the panel today. We have three representatives from development banks that are issuers in the green capital market space, and also an investor's perspective. So it's very rare that we have all these organizations together discussing and exchanging views on their experience in engaging with sustainable capital markets. So we have Isabelle Laurent, Deputy Treasurer and Head of Funding at the European Bank for Reconstruction and Development. We have Leslie Mastor, Vice President at the New Development Bank. We have Thomas Kessler, Principal Finance Specialist at the Asian Development Bank. We also have Carlo Funk, State Street Global Advisors, and EMEA Head of ESG Investment Strategy. Welcome to you all. So this falls within the theme of our Sustainable Policy Institute, where we look at a dialogue between issuers and investors. And a lot of you are already very familiar with this space. The issuance in the green capital markets is growing, has grown quite a lot. It's still quite small compared to the overall fixed income market, but we are seeing a lot of innovation, and a lot of that is coming from supranationals, from development banks. They were also the first issuer group to start investing in these asset classes. So let me start with you, Leslie, but before we do that, I'd like to engage the audience a little bit. So let me launch a poll to see how you think the sustainable investment agenda is changing in the face of the COVID-19 crisis. So there were worries initially that COVID-19 would detract attention away from sustainable finance. At the same time, others are saying that it is increasing awareness of the fragility of the financial system to non-financial sources of risk. And we have seen some developments, for example, the EU taxonomy, the green recovery being prioritized. What is your view? How do you see it in your jurisdiction? Has it encouraged greater attention, or has it moved attention away? I think we are seeing, even though not many of you are participating yet, that it's quite a one-sided response, and that's very encouraging. We have seen some attention go away from green finance. Some central banks, for example, are postponing some regulatory measures because the banking sector is very focused on addressing and surviving this crisis. But I think overall you are right, and is what we're seeing also in our network at UNFIF, that there is more attention to green finance and more innovation. So we look forward to hearing about this from our panelists. So Leslie, let's start with you at the NDB and where you're based as well. China is one of the jurisdictions where we have seen a lot of progress in that. It's ahead in terms of mandatory disclosures, in terms of taxonomies, in terms of green bonds as well. How do you see that from an issuer's perspective as well, in terms of your activities in this so far? And also, where do you see the next frontiers to be? Because we saw it just now in the poll, we've seen it that there is an increased awareness that we have to engage more seriously with green finance, but how do we actually do that?
Thank you very much, Danae, for having me, and also thanks to UNFIF for this initiative. You know, it's through dialogues of this nature where we engage different financial markets participants as well as broader audiences to discuss and debate, and through that new ideas emerge. I would like to focus my initial remarks on what is happening in the world of multilateral development banks more broadly, and then zone in specifically here on China. First point to make is that multilateral banks are focused on the public good, and sustainability is hard-coded in everything we do. Multilateral banks, as you know, initiated way back in 2007, the green bond movement, and through that catalyst, you know, that market have grown to become, you know, a couple of $100 billion in size. We are very focused now on identifying what is the next frontier. In that regard, there's a few changes underway. As you know, we started about 2-3 years ago or so to focus much more on our activities with regards to mobilization of more private sector long-term institutional finance. In other words, we want to crowd in more capital from your pension funds, from sovereign wealth funds, from insurance companies into development. So now we are changing how we incentivize people, how we report, what we assess people on as part of this effort. In order to be
successful. Has it been easy to engage with these types of institutions, pension funds, sovereign funds? What do you observe when you see how they are changing their approach to this? Have you seen a big shift in the past 2-3 years?
Yeah. Over the last number of years, I'd say over the last 5 years that I've been sort of deeply rooted in multilateral development banking as a practitioner, I've seen significant movements where sustainability is now hard-coded in the investment policies of most institutions that we talk to. When I go on roadshows, as I have over the last 5 years, speaking to institutions to tell them our credit story, why they should buy our bonds, one of the first or second or the most important questions that come to us, how green is your portfolio? So when we inform people that our portfolio, for example, in energy is 100% green, that the bank does not touch coal, our energy portfolio is either offshore wind, it's either hydro or it's solar, we have so much more interest, especially from European and as well as a lot of Asian institutions. But in this regard, there's a couple of very interesting developments underway. One of them is the work that is underway now is to create what we can call a sustainable infrastructure label. What we have right now are multiple standards. You have ESG as a sort of common phrase being utilized. But when you look at each institution, they have different metrics. They have different indicators of how they assess the E, the S, and the G. There's an initiative underway now to try and standardize and come up with a label that can be more commonly accepted, which will make it easier for institutional investors to participate, especially in infrastructure in emerging markets. So there's an obstacle.
And are you talking about a global label here or a label that you would initiate? Are you collaborating with others on this?
Oh, there's an initiative underway right now. It's an industry-wide initiative. It's called Fast Infra. It is led by a number of commercial institutions. HSBC is involved, EBRD is involved, IFC is involved, IBRD is involved, ourselves. So there's various institutions involved. It's a private sector-led initiative with substantive participation from the multilateral banks. So I think that once that work sort of reaches fruition, it will come up with something that could be a decisive move us forward in quite a significant way. The next key point that I'd like to make is that what COVID has done is promote the idea of a green recovery. I have to comment, Omfif, here on your document which you came up with, your first, the journal which I read yesterday, the SPI journal, where you have and I just went through 2 or 3 of them. On one page, you have the speeches of a number of central bankers. Uniformly, all the ones that I opened, all of them speak about the need for a green recovery, the need to look at stimulus packages to have green elements in them. I think there's a growing momentum. Certainly here in China, there's explicit policy interventions focused on, for example, people are starting to talk about green monetary policy. They started to talk about a macroprudential framework. Macroprudential framework, by the way, is the measures that central banks use to assess financial and monetary stability. They are putting in green measures now. So the entire system from a regulator's perspective is being greened right now as we speak. Interestingly,
just to pressure you a little bit on this, because do you think it's a good time that COVID has hit now and there is this awareness, because there was already an awareness and perhaps it came at the right time where there was momentum and now we're able to implement a green recovery? On the other hand, maybe it came a little bit too early because we don't have all these common standards, common taxonomies yet. So even though there is that awareness and that desire to build a green recovery, we don't have the underlying infrastructure that we need to do it. We still need to do a lot of work, as you were saying, with the labels, with the standards. So would it have been even better if that had started a little bit later? What is your view on the timing?
That's a very interesting question. Luis Pereira, for example, from BIS, touches on this in his article that he wrote for your journal. And he talks there about, for example, green swans and why central banks need to identify green and sustainable risk through systemic lenses. I think one can never have a perfect world, right? So we live in an imperfect world. I think that what we have now is so much and much higher, greater social awareness amongst investors, awareness amongst savers, awareness amongst society in general, that sustainability, the connection between public health, between prosperity, between inclusive growth and sustainable growth, people are beginning to see these linkages. It's no longer just seen as the domain of, your public finance officials to look at the growth models. The growth model, by the way, let's come to China. China announced a few weeks ago the start of its 14th five-year plan. One of the key things that I was looking for as I paged through that was the use of the word green. Right on the first page, they start talking about the need for the next 5 years to be informed by a sustainable growth path. It will be lower and slower growth, more balanced growth, but major emphasis on inclusivity, meaning more equitable growth, because what COVID has exposed is the inequalities, the levels of social inequality in the world. We cannot continue like this. So COVID has been a catalyst to raise public awareness so much more. So I believe in short, in summary, that we have gone through and we are still going through one of the deepest crises of our times, right? The silver lining is much greater consensus and awareness and focused effort to come up with things like a sustainable label. Central banks are more collaborating on this topic. BIS, which is sitting right at the center of banking regulations, are involved. So I think this period is likely to produce very positive outcomes in moving the needle, in moving to the next frontier. Thank you very much, Danae.
Thank you, Leslie. A good optimistic note for coming from China. Let's move to you, Thomas, and give us the Asian Development Bank side. You've also developed green bond frameworks. You are issuing as well. You are aligning your strategy with the Sustainable Development Goals. Where do you see the frontiers to be from your side?
Yes, thank you very much, Danae, and for having ADB. And I would like to take a little bit a step back, as you mentioned, right, and not just talk about ADB as an issuer, right? But I think it's important also to understand, to have the investors understand, what is our activity, what MDBs are doing, and in particular how ADB Strategy 2030 is tying into the SDG and the climate change agenda. And I would like also to share a little bit how the impact of COVID-19 affects our bond issuing program this year, and as you mentioned, what type of issuing activities we have on the green bond and on other thematic bonds. So perhaps just for those who are not very familiar with ADB, we were founded in 1966, and we are a multi-development bank, and we are headquartered in Manila, and we have 40 field office in all our developing member countries. So we are focusing on more or less 40 countries where which we help to develop. And so what is our vision, right? It starts really with a clear vision. It's about a prosperous, inclusive, and resilient and sustainable Asia and the Pacific, while sustaining the efforts of to eradicate extreme poverty. So what are the facts? Asia and the Pacific is still home to 40% of the world extreme poor, and also an estimated 1.7 trillion per year is needed until 2030 to fill the infrastructure gap. And then also what needs to be taken into consideration is, out of 10 countries most exposed to climate change and disaster risk, 7 are ADB developing member countries. So this has led, 2 years ago to a new strategy of ADB, which is based on 7 operational priorities that are all linked to the 17 sustainable development goals. And let me go through, because I think it's important, because it shows you the work we are doing. So first of all, our operational priority is to, as I said, continuously eradicate poverty and narrow inequities. And gender equality is thereby of utmost priority. But most important is also to tackle climate change and build climate and disaster resilience and enhance environmental sustainability. So we are planning to reach 80 billion in cumulative investments by year 2030, only based on our own capital, and we want to leverage this, with the money of other private financiers. And further, another operation priority is in view of the urbanization which takes place, is to make cities more livable, but equally important is the rural development and food security in the region. And finally, it's important also to focus on strengthening governance and institutions to get things done, and also to develop regional integration and cooperation to tackle global and regional issues. So these are our operational key priorities. So our development world and sustainable work is geared towards that direction. And what do we?
And you mentioned that quite a few countries that are most vulnerable to climate change are located within your region and your countries of operation. How has that motivated the innovation that we've seen from the ADB to move beyond your transition, your conventional green bonds, into disaster-linked bonds, for example, or the ocean economy, where you've done a lot of work? Is that motivated from the needs of the countries that you work with? Is that something that investors have kind of pushed more your way? How has that journey taken place?
Yeah, absolutely. I mean, we are really demand driven, right? I mean, we are setting up country partnership strategies, every 3 years, and we really try to assess together with them what are their needs. And so, assessing all these needs, led actually to led to these operational priorities, and also led to the to link them with the social development goals, and how do we actually make sure that we implement them successfully. So, very important is to focus on knowledge services and to build awareness and to promote solutions. And I think important is also, the partnership amongst the stakeholders and with other development banks. But as Leslie mentioned, I think one of the key new development is really to catalyze and to mobilize financial resources for development, from working together with the other multilateral development banks, but also attracting private financing. Because where are we, right? If we look at the financing needs in our region, in terms of developing towards the Sustainable Development Goals. Well, according to the UN Economic and Social Commission for Asia and the Pacific, there is still a substantial financing gap of around 1.5 trillion a year, or 5% of the regional GDP, to fully achieve the Sustainable Development Goals by 2030, right? And this was before the pandemic. So if we look now after the pandemic, a study by ADB shows that the economic losses triggered by COVID is about 8% of the regional GDP, or somewhere between 1.3 to 2 trillion US dollars. So it's very obvious that COVID-19 will further accelerate the financing needs and have a substantial impact on the progress of the SDGs. So what we have been doing is, together with the government, we have set up a package that responds immediately to their needs to address the pandemic. And in this respect, the 20 billion US dollars have been approved early this year in March, and of this already 12.9 billion has been committed in loans, in grants, and in technical assistance. And this is actually the pandemic is also an opportunity to build back better, and all these investments which are going to follow is also a way actually to recover and to get out of this crisis. So, to close, I think all this development has led to bond issuance worth $40 billion only this year. And that's how we are looking at, investors coming and joining. And this is all, SDG and ESG related, basically. But more private sector funding is needed, and investors sometimes request, that the ESG impact is labeled more specifically. So in that context, we are setting up, we have set up a green bond framework that allows us really not just to issue ourselves green bonds, but also help to develop our member countries for them to issue these green bonds. And I will I'll stop here, but I will be very happy, to outline a little bit more how this quantifies and whatever thematic green bonds and other opportunities for investors, we are exploring.
Thanks, Thomas. And I'm sure Carlo will have questions on that later on as well from an investor perspective, because something that we do hear a lot is about the lack of supply of bond issuance in that area. And the framework that you mentioned can be very helpful there. And it's something that we will need to see, and sovereign bond issuance in the countries that we work with will also need to come. Let's move to Isabel now. From a perspective from Europe, we've heard a lot of activities happening in Asia. Also, both Thomas and Leslie emphasized the importance of building back better, and also not having just a green transition, but also a just transition, and marrying the different parts of ESG. In Europe, it's perhaps a little bit more difficult to have that action, given that there is a lot of different parties involved. We had the news this week about the EU's recovery plan, which is very much focused on a green recovery, facing more difficulties before being implemented. On your side, of course, you work outside the EU as well, but you are very connected to the efforts that the EU is doing on the taxonomy, for example. So share a little bit of where do you see the frontiers to be in Europe, and also what we heard from Thomas and Leslie about the need for common standards, labels. How are you working with other partners globally on that?
Thank you very much, Danai. Yes, I mean, there's great momentum in Europe, and I think great awareness in Europe, but some of our region, because we actually, EBRD works across 3 continents. So North Africa, Central Asia, as well as in Europe, and the part of Europe that's part of it is falls within the EU, but part of our region is geographically in Europe, but not within the EU. And we see very significant momentum actually across the countries. It was very interesting. EBRD was founded in 1991, and already in our mandate explicitly, and it was the first actually supranational to have it explicit in their mandate, it required us, when we were looking at the functions of the bank, to promote in the full range of its activities environmentally sound and sustainable development. And a lot of the original impetus was about scrutinizing every project that we did for do no significant harm. Then we moved into a much more proactive focus on looking at where we could do positive green things. So we had a sustainable energy initiative, which morphed into a sustainable resource initiative to focus also on water and other factors. And this then transmuted again into what we call the green economy transition. And with that, the setting of targets, which I think is actually a very important part of really galvanizing things. So setting the target that in the period going up to 2020 for the 4 previous years, that we would try and reach 40% of our lending in any year to be in green economy transition activities. And these are broader than just renewable energy and energy efficiency.
And do you think these targets are, in your experience, have they come mostly from the market dynamics? So is it from investor pressure and demand, or is it also from government and kind of public push towards having these targets? What do you think are the strongest kind of motivations behind that and push factors?
I think there's a confluence, actually, of shareholders, EBRD's own push, and investors. And we see it a bit with even in ESG rating agency assessments. When you look at the kinds of questions that they do in their assessment, much of it depends not just on having the relevant policies, but actually targets and where you're heading. So the clarity about where that journey is. And we've just had approved the next few years of our green economy transition. So GET 2.1, that's going to focus on trying to move us towards 50% of our activities being in the green economy. And you mentioned just transition, as did my other peer MDBs. And, you know, that's very important that we focus not just on green, but on inclusion as well. And I think that sort of trying to marry these things up is going to be important, especially when we focus on some of the hardest to abate sectors and some of the countries of operations that certainly EBRD has that at the moment are very far from being in line with, say, where the Paris Agreement takes you. So I think that trying to have short and medium term as well as long term trajectories and being able to assess where those will be. Targets are part of that. Part of it is the mobilization of the whole organization for all our client base. Those are the things that really are quite galvanizing and very important in trying to assess how we're going to get from A to B in 2050, or in some cases it will be slightly later. I mean, that's part also of the Paris Agreement, a recognition that we don't all start from the same place and that we may need longer time for some. So I think this whole focus of trying to go beyond just renewable energy is extremely important in focusing on how we transition these very difficult sectors. And I think the language of the taxonomy has been quite helpful in that, focusing on you know, the enabling sectors, those things that we need to be able to see move forward. So, you know, the recognition that your wind turbines or your electric cars are not actually going to be that green unless steel manufacturing is green and other aspects are focused on. So same for chemical industry with solar. I mean, all these different aspects need to come together. I think also a focus on wider areas than just climate mitigation. So one of the things we've done, I mean, we've been issuing green bonds since 2010. And where the initial ones were mostly focused on renewables and energy efficiency, actually broadening it last year to also focus on specifically on things like green transition, but also on climate adaptation. So we started issuing climate resilience bonds with a climate adaptation framework, very much the neglected sister to date, but absolutely not only in the EU taxonomy, but actually in the Paris Agreement very clearly. And I think that trying to look more holistically at all the different things that we need to do, biodiversity being a case in point as well. So I think that one of the things though that I really believe has been important has been the investor-issuer dialogue. And that engagement together is mobilizing on both sides. I mean, internally, despite having a very large environmental department, actually the issuance of green bonds for the last 10 years has really moved us forward in terms of our impact reporting, our discussions on very different aspects. And being part of a body, I've been fortunate to be in part of the Green Bond Principles and on their executive committee now for several years, and also chairing some of their groups, the Impact Reporting Working Group now for many years. where we try and come up with metrics to encourage people to report on the same things, which should help with making it more additive for the reporting for investors, so that they can aggregate. It's a very challenging area, and so much of aggregation depends on underlying assumptions. So, asking issuers to provide clarity on those assumptions so they can be re-engineered by investors is also very important. So there are many different things that are all moving in the same direction at the moment.
Thanks very much for your point and for adding that nuance about the climate mitigation approaches as well. And I think it's very important what you said, that we can't just say suddenly investing in renewable energy will solve all the problems. But how do you see that now that this is so much in the public domain and there is so much pressure on governments to do something, to what extent is there that resistance to, no, we have to take a nuanced approach when there is so much demand to just invest everything in renewables from activists, from public opinion, from voters, and having that slight, perhaps more cautionary approach of looking at the supply chains, as you mentioned. Is the steel sustainable for the renewable projects? How can we invest in the transition industries and the enabling industries as well? Do you think that there is perhaps a temptation to just put a lot of effort into what is popular and not look at these details? Or do you think that we are doing it in the right way?
I think it really depends on the investor base. So my sense, and I speak to a lot of green investors, is those that are most steeped in this, and State Street has been focused on this for a very long time, as we're no doubt here. But those that are steeped in it aren't just looking at sort of knee-jerk saying, no gas, no whatever, under any circumstances on the whole. They tend to be able to discuss and articulate what the transition strategy looks like, how we're going to get there, where it's going to be important, a much greater focus on science-based targets, and looking at slightly in the EU way of, they call it do no significant harm. But I think that this aspect of trying to understand risks and speed and just transition and putting all these things into the pot and trying to see whether still we can get to being Paris aligned, but it may take different trajectories for different types of industries or different geographies. And I think that those investors on the whole that are, as I say, most steeped in this, absolutely recognize that and tend to be much more nuanced. So I think the dialogue is what's very important, and not this sort of knee-jerk black and white.
And we will have that dialogue as well as we move to Carlo, but just one more to pressure you a little bit more on this. Yes, we do need to have a nuanced approach. We can't just say negative screening strategies, exclude everything. That's not going to help if you don't help these industries that need to transition. At the same time, we don't have much time. We need to be doing everything we can. We are now facing the COVID crisis, and with what started as a very small virus, it has stopped the whole global economy. So with climate change, it could be even very, very, very big risks that are on the horizon. So how do we marry that need for nuance with the need for action?
I think, again, it's about the setting of targets, looking at trajectories, how we achieve them. Also, this focus on climate adaptation, I think, is, as I say, critically important, because even if we get to where we say we need to be in 2050 because everything moves in the right direction, it doesn't mean that we're not already experiencing greater heat changes, more flooding, more desertification, more wildfires. So we already need to look at the climate resilience agenda and not just the mitigation agenda, as well as things like biodiversity that were absolutely embedded in the problem of COVID. So I think these sort of broader agendas and not just a narrow focus are very important, while setting ambitious goals and really being able to look at different trajectories and how we move the hardest to abate sectors and what that's going to look like, what the path will look like.
Great, thank you very much, Isabel. So Carl, over to you. You've heard from 3 MDBs, issuers. From your perspective as an investor, how do you see that side working? We've heard the issues about not enough supply. You're also, some of your clients, investors that have very specific requirements in terms of the liquidity that they're looking for in their investments. Do you think that we are on the right track in terms of common standards, in terms of the right products in the market?
Well, first of all, thank you very much for having me. Yeah, there are a couple of very interesting aspects here, and I want to touch on like 4 of them. But before I mention this, I think I want to echo quickly what Isabel said, that the adaptation piece of things cannot be forgotten about, because this entire conversation around exclusion versus financing a transition is a very, very, very important one. Because when you look at science-led targets, for example, Isabel has mentioned this, the IPCC report, the latest states, okay, in order to be on a Paris-aligned trajectory, you need to increase renewable energy usage and demand, energy usage by 145% by 2030 and by 310% by 2050. But the question is, where will this come from? Will this come from only newly emerging industries, or will the current incumbents play a significant role in this while transitioning their own business purpose? So I would argue personally that the current incumbents will probably play a major role with them. So do you want to categorically cut them off from financing because they still have an oil well somewhere? Question mark. That's a debate, by the way, which we are having with investors, and we see in day-to-day conversations I'm having very different views in that regard. So this is, I think, this important one. Then the second one is around, for us as a big fiduciary, having some 3 trillion under management, obviously the engagement part of things is also very important. That is also accounts both for the equity and the fixed income side. If we completely forego engagement and we cut ourselves off from providing financing, then we also don't have a seat at the table when we're having conversations around this. So this is also a question mark where you still need to understand that it's often not as black and white, but you need to do the homework to really understand the respective
situations. Just on the strategies. So for example, Leslie also mentioned earlier the kind of increased interest in this from sovereign funds and public pension funds. And these are also a lot of your clients, and they are institutions with a very big public ethos, and they answer to public shareholders. So if there is that demand for negative strategies, and the question that you posed about, do we just exclude financing from if a company has an oil well, how do they manage these conflicts, and how do they manage them when they work with you in terms of the strategies? That would be one question. And then you mentioned the importance of shareholder activism and investing in equities and having a seat at the table. That's great, but it's also a very complex strategy, and you need the know-how, you need to have the expertise to do that. And for a lot of asset owners and perhaps asset managers that are not as big or are just beginning their journey in that, what would be your advice to them? Because it's easier to say we're just not going to invest in the sector. It's harder to do that if you're a very big in terms of AUM, because you can't exclude everything. Then what are you going to invest in, especially if green bonds are a very small part of the market as they are now? But it's not as easy a decision to say I'm going to exclude and it's black and white, or I'm going to engage, but it's difficult to do so.
Well, I mean, obviously for segregated mandates, if a client asks us to exclude something, then obviously we are going to do this, full stop, but we will not employ this categorically as at a firm level. And I'm going to come back to exactly those questions when I'm walking through those 4 points I want to make. So number one, and Thomas mentioned this, you need to and want to attract private financing. So this is the number one big pillar for us as an investor overseeing, again, 3-some trillion in assets as a fiduciary. So we have clients, very, very big institutions, very big sovereign wealth funds that engage with us, and they directly demand from us to increase our allocation to green bonds. So we face the client pressure, and they directly make this ask to us to say, okay, obviously we want you to do the homework, but we trust you as State Street that you might have a seat at the table, and we want you to actually work on increasing the climate bond space and directly engaging with issuers. So this is one particular part which I think probably has not have happened a couple of years back, that clients of fiduciaries would directly come to us and say, you know what, we might be direct buyers on our personal balance sheet probably as well, but we want you as our asset manager to actually increase the allocation to green bonds in the portfolio you manage for us. So this is number one. The second one is, how do we then as an asset manager ensure that we're buying bonds that are actually walking the walk and that they are using the proceeds in the way that the headlines promise? There we found out that we actually really need to partner with third parties. So Isabel mentioned she's on the board of Green Bond Principles. We ourselves have a very strong partnership with the Climate Bond Initiative, because we need the help in order to really identify what should constitute a green bond. Obviously, we engage ourselves, but in order to make sure that bonds that are issued are in accordance with certain taxonomies and frameworks, we need the help. And we are effectively looking for 4 factors. Okay, the qualification of the use of proceeds, where it's going, that the proceeds are ring-fenced, and that it's constantly reported on. So those are very important points which we cannot do ourselves, and we are relying on the partnership with third parties, which plays a super important role. Third point is, the financials still need to make sense. This is obviously what the clients tell us, is that we want you to buy and over-allocate to climate bonds or social bonds, but obviously please make sure that my risk-return profile is not harmed. So you could argue that sometimes a climate bond could be a lose-lose situation. And I'm not saying that I'm obviously pro-green bonds, but you could argue that sometimes climate bonds have a burden for the buyers, because sometimes they would have the same yield and the same duration, and then sometimes with potentially less liquidity. And if we as a big fiduciary are selecting a vehicle, we need this vehicle to be able to absorb relatively large amount of capital. And then you could argue, but this is not my field of expertise, but from my colleagues here on the panel, is that it could be a burden for issuers, because you need to probably have more work in how to label this and how to report on this. However, if you can turn this around, then it can really become a win-win. And then the last point, which is also important and sounds relatively boring, but as a big beta house, if a bond is actually included in an index or in a benchmark, is actually pretty important for us. Not for so much active strategies where we would have the discretion around buying or selling ourselves. But if we have big mandates, and this is still the largest part of the capital, is index bound. So every single time, if we want it or not, we buy a bond that is not included in one of those big benchmarks. This is being reflected in the report as additional tracking error, deviation, which is then in turn sometimes perceived as additional risk. And then you have certain jurisdictions or certain clients within their mandate that have a legal obligation not to deviate from those benchmarks so much. So this puts us then in the situation where we say, okay, on the one hand, we have the clients that ask us to buy. We have the intrinsic motivation to buy because we're interested in, we want this, it's part of our mission. But then we are managing the money according to legal obligations, which perceive any deviation from benchmarks as additional risk. So this part of inclusion of bonds in standard benchmarks is a very important point for us, which makes it easier for us to buy.
Great, thanks very much, Carlo. And I would like to give any person a chance to respond to that in terms of how do we turn what could be a lose-lose, as you say, into a win-win, and this idea of including them in the indices. But I do like to ask the audience another question, also to remind you that you can start sending your questions through and ask them to the panelists. But we second poll questions very much about what Les and others about the difference in standards that we see different directions. If we can launch the poll question. So do you think green bond standards should be set internationally or should they be region specific? And that is some in terms of the need for standardization, but at the same time, different markets may have different issues, may have different market structures. There are different initiatives being developed. There may be at different stages of implementation. Have the same search for. Let's start getting some resources. More or less split, more in favor of internationally set standards, which makes it also more challenging, or closer to 50-50. But yeah, perhaps we can close the poll. That seems to be a less as far. It's also indicates it's a difficult one. But let me go back quickly to the panelists for a response to what we've heard from Carlo and also what you've heard from your peers as well on this idea of how do we make it easier and more of a win-win for issuers and investors, and given the constraints of the liquidity that we heard from the fiduciary duty and so on. Leslie, do you want to start? Or perhaps we can go to Thomas then.
Sorry, Danai, I can't tell whether you were, because you keep breaking up, so I don't know whether it's my internet or yours.
Yeah, I had the same problem, but if you hear us, then...
I can hear you fine. I don't know if you can hear me now.
Yeah, lovely, thank you.
Okay, sorry about that. Yes, the panelists then, and yes, Isabel, if you can take that first.
So I think the important aspect of achieving a win-win is that we're talking about the greening of the market generally, not just a green bond market or a sustainability bond market, but the aspect of the dialogue that happens between issuers and investors, trying to understand what are the challenges, how they're moving. And it's not just going to be resolved by the green bond market or issuing green bonds or sustainability linked bonds, but also in other information that's put out in line with TCFD and other factors. So it's looking at the risks, it's looking at the challenges, it's looking at the context. And it's one of the areas where this discussion about looking at your question, international versus regional, is always an important one, which is that the international standards, if we have them, have to be about levels of transparency and processes and sort of information that is offered out. The importance about the regional element, context is everything. Trying to understand a project can't be just about the numbers. It has to be a much more holistic take. I mean, you can look at something like water reduction, and if that's in a place where not enough people get access to clean water, then it's not very helpful to look at just the number for reduction in and of itself. If you talk about green transportation, electric cars, you really need to understand whether actually that's better or not if the grid is still very heavily dependent on coal. So all the different aspects of the context are so important in the interpretation of whether something is meaningful or not. Is this business as usual? Is it really moving the dial? You know, if we replace our car, any of us this year, even a petrol or not to a green car, if we replace that, it's still going to likely be more efficient and better than the previous one. Does it change the dial? Is it in line with Paris? It's not really where it's at. So trying to get a better understanding of context has to be done on a regional and a sectoral basis, and not just with broad brushstrokes that then don't really help an understanding of how meaningful something is in a particular environment. And, you know, as we've talked about, we can't really mobilize sufficiently without that. So I'm very against confusing capital ratios, which a lot of people have talked about, as a possibility of incentivizing the green bonds or green issuance over other issuance. I think that's fundamentally problematic, because it's not clear that it really improves the riskiness from all angles. And that to me seems a difficult one. When we reviewed, I reviewed EBRD's portfolio and looked at our NPL ratios over time, and then compared it to what would be our deep green portfolio, and how the NPLs for that have changed over time. And actually the latter was very slightly, so we're talking very marginally, higher, not lower, than the NPLs for our overall portfolio. And the reason is that much of it is in the renewable sector becomes heavily dependent on input tariffs. And those are apt to change with different governments, different views, different economic position over time. And so that has often made things that are deep green actually not sustainable from a credit perspective or a financing perspective, and have therefore incurred NPLs. So I think that we need to look at how we incentivize moving away from brown. I would have preferred myself to have had a brown taxonomy, not a green taxonomy, so that everybody starts talking about the pace at which they're phasing out other things. Because after all, there's much more than just green. There's social, there's economic, and there are lots of things that are social and economic that aren't brown. So I think trying to ensure that we're focusing on how far and fast we're moving away from brown would be a very useful discussion and debate with investors, not just the focus on green. And that's where you can end up with sort of disincentivizing continued or slower trajectories from the moving away part, rather than just this over focus on one aspect of development or one of the SDGs, or a handful of SDGs, rather than the greater picture. I don't know if that helps.
Yeah, no, that's very helpful. And I think it adds to the nuance, as you said, and also this whole discussion about the capital requirements. We could have a whole new roundtable about that in the brown and green taxonomies, maybe a follow-up one for the Sustainable Policy Institute. But let me turn to Thomas. Do you have any views on that particular question? And we've started having some very interesting questions from the audience as well, more on the macro themes. So let's, if you have any views on that, otherwise we'll move to the audience questions.
Well, I would like to throw in a few ideas, because I mean, a lot have been talking, and there's a lot to be said. I think what I would like to clarify also is that, if we talk about, I'm very much in favor for this dialogue between investors and issuers. But what we need to understand is there is not one investors. There are so many different types of investors, and they have different needs, and they have different, strategies. And so that's why also we at ADB, we have launched this green bond framework, but we are actually building a portfolio of different thematic bonds. So we have started to issue, water bonds, gender bonds, or very specific health bonds. For us, a big topic is going to be, the blue finance, because we are exposed. Our countries are exposed to ocean and diversity, and the people they are living out of the oceans. But they are at the brink of being destroyed. So to invest into blue economies and healthy ocean is one of the next focus. And I think these themes will attract some very specific investors. Now, from the issuer side, I think we also need to say, well, there are different categories. Well, the development banks, they are issuing, as I said, well, on the thematic bonds, it's 3 billion, green bond, it's 8 billion since, and we're going to continue. But I think our focus is also to develop the capabilities of our developing member countries to issue bonds themselves, and that implies also a lot of activities. First of all, I think, or related to that, the other side is that issuing, the financing instrument is one thing, but you need the project. And I think that's still a very, challenging issue for lots of our developing members is to say, well, we have development projects, but how can we actually label them so that they become green or blue, or that they meet some standards that are internationally recognized, and there are some.
And maybe on that, I can ask a question, because it came through from the audience on the standards exactly, and they're asking how useful would it be if central banks set out international standards for green bonds, and that would they consider them for future asset purchase programs as well? What do you think about that?
Well, I guess my colleagues will have some ideas as well, but let me give you an example, right, which actually shows this problematic. If you have, for instance, building a flyover bridge in Manila, this may significantly improve the traffic conditions. It may have less CO2 emissions. It creates, greater mobility. So this can be seen as green social project, right, by investors in emerging countries. But investors from Europe or for the US, they may think differently about this. So I think, what's more important is that we design some taxonomies based on principles, but we look at the local characteristics as well, in order, as I said, to make these, and I think, Isabel also mentioned this, we need to have projects, leading us to more sustainability, to become more resilient climate change. And it's a step-by-step approach.
Great, thank you very much, Thomas. We have quite a few questions from the audience, but since you mentioned all these new frontiers and blue economy and biodiversity bonds and so on, let's have another poll questions for the audience in terms of where do you see the biggest opportunities now on all these emerging areas of sustainable finance? So is it green bonds in emerging markets? Is it biodiversity finance, for example, agri-tech investments? Is it transition bonds? Is it target-linked bonds? Is it insurance-linked securities, catastrophe bonds? What do you think are, and all of these are big opportunities, of course, but what are you focusing on most of your energy now? Let's start seeing the answers to that. And maybe while we wait for the answers, one question that we had from the audience, and maybe that's one for you, Carlo, given that you spoke about the engagement with your clients and the public investors. Have you seen any large investors from the public sector be prepared to take a potential reduced return in order to fulfill an agreed ESG allocation? And you spoke very much your legal obligations and that it is about the return as well and the liquidity, but do you see that in that way? Is that a right or helpful framework to think about it? Because of course we also are seeing increased awareness that it's a business case for doing this, it's protecting portfolios from risk. But does everyone see it in that way, or have you seen some cases where they are prepared to take a potential reduced return?
It's hardly the case, to be honest, and this is the case for most ESG investment principles. I mean, you will have a subset of clients that has maybe a very philanthropic background to say, okay, it's our fundamental mission as investor to build sustainable capital markets, but and having that mission even superseding to some degree financial outcomes. Those investors do exist, but they are very few, because at the end of the day, the big money that is moved with sovereign wealth funds, with big pension plans, with big institutional clients, it's not even that the decision makers there would like to see it otherwise, but their hands are obviously bound by legal obligations to secure the money for the future generations for long-term value creation. So there's a very, very tiny subset of clients that would forgo certain financial aspects, but I would not bet on that this is the case in order to really make a change. Having said this, I think if we all work together and if we all learn from each other, I don't think this question is actually necessary, to be honest, going forward.
Thank you, Carlo. Yes, that's very clear. And it's a small set that is getting even smaller as we go. We have the results now. So transition bonds and renewable energy seem to be the greatest opportunities. Thank you for that. But again, fairly high interest also in other types. We have two questions that are a bit more skeptical, and let me turn back to you, Leslie, for these, because we haven't heard from you in a bit. So the skeptical question, one is about financial institutions like banks or shadow banks that are going through massive financial stress at the moment because of COVID. Are they resilient enough to invest in green and climate technology? For example, the UK is considering fossil fuel cars and so on. Is that going to create technologies that are inefficient or lack quality, because innovation needs time and quality? So is that very intense interest that we're seeing now perhaps going to sacrifice quality because of the timing aspect? That would be one skeptical question. And the other is, could green bond issuance lead to an over-leveraged sector in the green economy, which would be a burden for the economy and fiscal deficits of governments?
Can you give me an indication of what the questioner had in mind with respect to how green bonds would lead to over-levered position? I don't follow the logical sort of thinking process there. In terms
of being, I mean, that was a question as I read it, but in terms of a temptation to issue more, to go into more projects, and that may not be in line with the fiscal dynamics or backdrop of the countries that are issuing them.
Okay. Look, I mean, I'd start with the second one first. I would say that it's very important to highlight that a green bond is a debt instrument like a normal bond. At the moment, also, as you might know, there's not really much price differentiation between a green bond and a normal bond, right? And therefore, I don't think there is any there's any risk that institutions, governments, that there will be an issuance of green bonds which is not directly linked to, for example, use of proceeds, the idea of governments raising more debt because there's a temptation to increase, for example, green metrics, I think is not likely to happen. I think it's much more important to highlight that as time evolves, there is no question, as climate risk is understood and integrated throughout every credit investment committee decision maker of all market participants, there will be a pricing differential that will come. We are not quite there yet, but in other words, when the central bank in a particular country assess Bank A and Bank B, Bank A has got exposure to a number of fossil fuel interests. Bank B is wholly and fully have exposure only to green, for example, renewable energy interests. When you make an assessment of the financial, of the sustainability rather, of these two banks, you will come to the conclusion, as I said earlier on, banks are already now introducing in their macroprudential framework, which Basel is, for example, also making reference to, that bank will be seen as more sustainable because when climate risks are introduced and assessed in the models, they will give that second bank a better score, which means that that bank will get funding, or their capital with the central bank money will get more preferential interest rates, for example. So I would say that we are now in a period of evolution towards a new regime. It's not clear yet what shape and form it will take, but it is happening very rapidly, and there will be inconsistencies and some contradictions, etc. But it's a normal part of the development of any market. And I'll just end off there on that particular question by saying the green bond market was started literally by World Bank, IBRD in 2007. There were no standards then. It was started, and then the market sort of evolved. Different countries, Europe followed, and so on. And today we have global standards set by IGMA, and it has even been further and further refined. So some patience is required for this kind of evolution process. That was the second question. Your first question, can you just rephrase it for me?
Yeah, it was about
again,
the technologies and quality, and do we have enough time to create the right technologies given the pressure with financial institutions going through financial stress through COVID? And we've had another linked question that are financial institutions in a good place to take risk now and invest in new technologies?
Yeah, I would say the first point to make, it's very important, as we all know, to distinguish between this crisis and the last major financial crisis which we had was 2008. That crisis was fundamentally a banking and a financial crisis, right? This crisis was a public health crisis which translated into the real economy because of the successive lockdowns in many countries, and then had ripple effects in terms of defaults of small, medium, and micro enterprises. Also some defaults of companies who traditionally would have been perfectly well-funded businesses, but now didn't have the liquidity to meet some of their obligations. So we do not now have a financial crisis by any stretch of the imagination. There's been no banking defaults, for example, now that you in any way can compare with the scale of what the world had to deal with in 2008. So the first point to make is that the nature of the financial stress is of a completely different order today. The second point you made around technology, there is also a significant adoption of new technology today, especially clean and green technologies, because the cost and the pricing of a lot of these have come down significantly, whether it's the cost of wind turbines, whether it's the cost of generating solar power. So there's an adoption taking place at a very significant scale that will be net positive going forward. And this may be one last point to make, very brief in 30 seconds. I omitted in my initial remarks to start off by saying, here in China, the announcement that at the UN General Assembly by the president of this country, that China, which the second largest economy of the world, has committed itself to carbon neutrality before 2060 is a very big deal. That will direct policies from every state-owned enterprises, every municipality, every bank, the central bank, every single institutions have to put their lenses on, firstly for the 2035 targets and then the 2050 targets. But there will be major industrial change that will happen at a scale which we have not seen before. And it's likely that we will see Asia leading that green revolution.
No, thanks, Leslie, and thanks for raising this as well, because there's a big debate in our world when we speak with central banks about, should central banks be directing policy here? But it's actually not. It's the governments that are setting the direction.
That's right.
And as financial institutions, MDBs, central banks have to respond to that and say, well, the financial system is changing. What do we have to do to protect the financial sector as a result? But we have two questions on the transition that I'd like to pose to you, Isabel. So one is about the role of transition finance in moving away from brown. So quite an open question, but what do you see there? And then the other question that's a little bit more specific is about, is it fair to expect nascent and new industries like climate technologies to be competing in capital markets with large firms that are rich in capital, such as fossil fuel or coal industries? And you spoke a little bit about the need to include them also in the transition, but how do you see that distinction perhaps in competition between the new technologies and the moving the existing firms along?
So the very open first question about transition, I think that, this has been a much more recent focus. And I think, as I said, that the EU taxonomy was at least helpful in trying to think about that and set targets for those industries. So it stopped saying, I care where you are right now. I care only where you're going and how much that that moves things forward. And I think that people talk a lot about the Paris temperature goal. So they focus on that aspect. but they don't focus on all the wider aspects of what the Paris Agreement says. So I think they lose sometimes some of the different parts. I mean, there was an aspect where it says that it's looking to make finance flows consistent with a pathway towards low greenhouse gas emissions and climate resilient development. That bit often gets lost in the Paris Agreement. That's the Article 2.1c. And also the fact that people are going to get there at different times. So they have that where they talk about the equity and the principle of common but differentiated responsibilities and respective capabilities in the light of different national circumstances. That's under 2.2. Again, we don't hear very much because there's always this assumption that everybody's got to get there at the same pace as though we're all starting from a different part. And in Article 4 of the Paris Agreement, they also recognize that peak greenhouse gas emissions will take longer in developing countries. So this is not to excuse, it's not to say delay, it's not to say we shouldn't all be mobilizing with great energy, but just this recognition that transition will take longer for certain sectors and for certain geographies. And that's going to be desperately important in ensuring that we get there, because there's no point leaving a lot behind. And again, that's the same thing when you're talking about your second question about incumbents versus others. I think one of the things when Leslie was answering the other question, on the first question about are we going to back the wrong horses to some extent, or, you know, sort of suboptimal ones? I mean, I think we might even do worse than that. We might occasionally back totally the wrong thing. You know, it's very quick sometimes. I mean, we had what we often refer to as Dieselgate, you know, where everybody said greenhouse gas emissions have to come down, diesel's so much better than petrol, let's all move into that, and not really understanding the consequences from a pollution prevention and control. So I think having a much more holistic vision for where we need to be in 2050, that includes resilience, includes biodiversity, includes other things, and starts assessing technologies to the extent possible against those different aspects and just transition, I think we're going to end up with a much better outcome. But we can't give up on the idea that speed is of the essence. Absolutely not. And the moving away from brown. But that isn't to say that we shouldn't expect that sometimes we'll make mistakes. Sometimes we won't understand the implications of something and it becomes more apparent. And that shouldn't deter us from where we need to get to.
Great, thanks, Isabel. And I think that's an excellent note on which to close this discussion. We have come to the end, but it's a very strong message that speed is of the essence, but also we need the nuance. I think that has been very much the message in our panel today. We've covered quite a lot of ground on transition finance. There's so much that we could have gone on for. I know Thomas wanted to speak about ILS and cat bonds. I'm so sorry we've run out of time, but please do read the Sustainable Policy Institute journal that's coming out at the start of December, which is focusing on biodiversity. And we've had excellent contributions from central banks and issuers and investors as well there. It is a very big theme. And also we look forward to hosting you in the future SPI roundtable to continue the conversation. I'll hand over to Carlo just for some final closing remarks now as well on his side. Thank you.
Yeah, I simply wanted to quickly address the topic about current incumbents and new emergent players, because obviously, and we touched on this, I mean, when you decarbonize an entire economy, it could be a threat for certain industries. And it could be a threat for maybe even economic growth in the short term if you take this view. However, we must not forget that there will be a lot new jobs created by this. And I would, for example, if we would probably make a global poll on how many people will have heard of Exxon and how many people will have heard of Next Era Energy as a company, I would argue that Exxon, most of the people will have heard about Exxon, but most consumers and investors, or many, might have not heard about Next Era Energy. And Next Era Energy is the biggest provider of wind and solar energy in the world, and they have in October exceeded Exxon in market capitalization. So what I'm saying, there are a whole lot new players coming into the market that provide new service, they create new jobs that we might not already have on the radar. Having said this, I still think that working together with current incumbents to make the transition is still absolutely important, but I think I want to make this point.
Great, thank you, Carlo, and it's been excellent to partner with you and State Street in this roundtable, and we look forward to further collaboration. And as you say, maybe that is some study that we should do about global perceptions of this and how they are changing, and I think it would be very interesting. Thank you very much, everyone, and enjoy the rest of your days. Good evening to Asia, and good rest of your days here in Europe. Thank you.
Thank you very much.
Thank you.
Thank you.